Welcome. Now I am here with you to discuss regarding Indian Accounting Standard 18 revenue. Before going to the standard, there is a need of knowledge regarding revenue, income and fair value as per Indian Accounting Standards. See, first one, revenue is an income which arises from any activity of business. For example, sales receipts, fees collection, interest earned, etc. Next one is income. It refers to net profit that is remains after expenses and taxes are subtracted from the revenue. And final one is fair value. Fair value is a rational and unbiased estimate of the potential market price of goods, service, asset or liability. Indian Accounting Standard 18 covers the revenue generated from sale of goods, rendering services, and even when company earned interest, royalties and dividends. Only after receiving consideration, company can recognize the revenue in fair value only. Sometimes there is a difference between received amount, that means nominal value, and fair value. Then the difference is considered as interest of revenue. This standard asks to recognize each identifiable transaction separately and only after the transaction performed, even consideration received jointly. For example, if product price includes service cost also, the amount is deferred and recognized as revenue when that service is performed. Let's understand the revenue recognition conditions as per Indian Accounting Standard. See, condition for sale of goods. The recognition of revenue only after the transfer of risk and rewards to buyer with losing control over the asset, and there is a reliable measurement for cost and revenue of sale. Next, the conditions are remain same to recognize the revenue from the rendering of service, but here one additional is that revenue can recognize on the stage of completion also. The firm can recognize the interest as accordance with Indian Accounting Standard 109 financial instruments. Royalties are recognized under accrual basis as per agreement, and dividends on the shareholders' rights. If any business using barter system of trading, that won't accounted as revenue. Barter system means exchanging of goods and services without any monetary value. Revenue should be recognized as per matching concept of accounting. Means firm need to recognize revenues and their related expenses in the same accounting period. And if consideration is received before sale consideration, it should be recognized as liability. As per Indian Accounting Standard 18, company need to disclose the accounting policies and amount of revenue from different categories with other related informations. Please remember, the Indian Accounting Standard 18 has been withdrawn with the effect from 1/4/2018 after the introduction of Indian Accounting Standard 115. Thank you.